Hey, it's Michael Saul, but everybody calls me Tiny, and this video is not quite ready for a rally, but this is stock market analysis for the week of October 29th, 2018. If you would like to receive intra-week updates, last week I did a whole bunch of them. Go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the distribution list. Yes, sometimes I even update multiple times in a day, but usually it's not that often, just as a heads up, it's because of the increase in volatility. Join the Facebook group at facebook.com/group/attackthemarkets. If you like what you're hearing on this video, give me a thumbs up, leave a comment, and hit that subscribe button and smash that bell so you're always updated when a new video is put on the channel. Let's take a look at what happened last week. So last week's video was entitled, Get Ready for the Next Leg Down. And yes, indeed, we did see a next leg down. Now, as of Tuesday, I wasn't sure that this was all she wrote. Okay, you could see the S&P 500 came down to the 62% retracement. I wrote it in the update to the list members and, of course, to my inner circle. And I said, I don't know if this qualifies for the next leg down. I believe we have further lower prices. There we go, to be seen. Wednesday we saw that. We went lower. Then we paused again on Thursday. And I mean, this is a pause candle now. Look how wide that is compared to, what we saw on the grind up, right? And then Friday, we had more back and forth and zigzag. And you can take a quick look at the 15-minute chart here. You could see, really nice volatility and range expansion if you are doing day trading. If you're swing trading, there was a coil here that did click out on Monday. It did break down on Monday and continue down. So there are swing trading opportunities as well. Now, let's talk about the title of this video, which is not quite ready for rally. I don't believe the lows are in and we're just going to turn tail and start to move here. But we could definitely bounce sooner rather than later. As a matter of fact, I believe if we see further downside early in the week, take out Friday's lows, come down to the 78.6% retracement here from this swing, all right, or the measured move, which is down here at 260.20, and then reverse it, I think that we may be able to put in a pretty decent rally. New highs from here? Yeah, that's a little too soon to be making that call. However, I would not be surprised if we got a bounce, paused, and then we could lean against the coil one way or the other, just like we did here, wait for it to break, and then go with it, either to the upside on a rally or continue downside. And yes, we could see continued downside. No, I don't think it's a bear market. No, I don't think this is going to be a prolonged, extended correction. I have a feeling right now that we should still be able to see the highs, fresh highs into the end of the year. However, right now it's a guess, right? I'm not just going to be backing up the truck and loading into long positions and calls and, oh, yeah, we have to go higher. We don't have to do anything. We don't have to do anything. All right, we're starting the month of November, which is historically starts the best 6 months for, I believe, the NASDAQ or the broad market, either one. Either it's the NASDAQ or it's the broad market, or that started in October and we're in the midst of it, whatever it is, right? So you have seasonality at our back here, but technical-wise, this was a pretty nice-sized waterfall here, and look how long it took us to recover the last time, right? It took us, most of February, all of March, all of April, and then all of May before we finally broke. We didn't see new highs again all the way until August. Now, will this be the same here? I don't know. Okay, I can't know. Right? I have to look at the price action. But the plan for this week is to look for some more downside on the short term early in the week, and then watch for a reversal and hopefully a pattern to lean against to play what will start as a bounce and then perhaps set up in something better, like a nice pause pattern that will lead to a rally. Okay, that's what I'm looking at. If I'm wrong and we just keep going down, well, that's why you use stops, number one. Number two, that's why you don't guess All right, you wait for a pattern to lean against, even if it's just a simple one-bar candlestick pattern. I know bar and candlestick kind of contradicts myself there. But even if it's a one-candle reversal pattern, at least it's a pattern to lean against, okay? Any questions, do not hesitate to contact me at tiny@attackthemarkets.com. Let's look at the rest of the indexes. Here's the Dow, not really that interested. The Russell fell shy, came through the 78.6% retracement, but fell shy of the full February retracement. The mid-caps did not disappoint. That got the full retracement. And the NASDAQ went down to the 62% retracement. So we are at key levels here. I'm just still looking for, and doesn't mean that all the indexes have to go lower, right? I'm looking for the broad market to go a little bit lower and then reverse. Doesn't mean that has to happen. It doesn't have to happen at all, okay? That's just the model here, is that we go a little bit lower, then at least try to reverse and get a bounce. Remember, the difference between a bounce and a rally. And if that bounce is lame with poor participation and poor volume, then that's going to set up to be another shorting opportunity. All right, let's look at some of the sectors. Semiconductors, yeah. So semiconductors broke just better than a year range here to the downside. Watch support coming up at 1097.50 on the semiconductors. Let's look at some stocks. All right. KLA Tanker, yeah, it just was one of the strongest stocks. Now looks like this could be a topping pattern here. We want to look at support at 83.20s. Okay, here's NVIDIA. Yeah, so NVIDIA was, talk about a strong stock. Look at this uptrend and then boom, big push down. I mean, this lost a lot of its value here. This would be considered bear market territory because it's over 20%. Of a decline so far. Watch 180.68. How about the banks? Banks have not been acting very well, and they look like they could retrace all the way back to the September 2017 lows. Look at this. I mean, this looks like, I'll draw the lines in for you, and you can see for yourself. This looks like a coil here. So again, you want to lean against it. If it breaks to the upside, okay, maybe it's worth a bounce, but the momentum is clearly to the downside here. Here's the broker-dealer, similar. Banks look weaker. Here's biotech. That was a pretty strong group, and now it's weak. See if it pauses for a couple of days here, and if it's going to continue or it's going to get a bounce out of its coil. Let's look at some of the glamour stocks. Amazon. So Amazon disappointing guidance and earnings and below the 200-day moving average for the first time in an awfully long time, very long time. Okay, my chart isn't showing the whole thing. I have no idea why, but yeah, this is. Let me see if I could scooch this over, and if that'll help. Right now, it's not. Okay, whatever. But it's first time it's been under there for a while. Notice it broke and had the spinning top here, so it's not fully committed to. Oh, we're going to break the 200 and just fall. So watch here. I mean, talk about a decrease in wealth. I also read that Microsoft is now the second largest company by market cap, I believe, next to Apple now, right? It overtook Amazon. Microsoft holding up better, right, overall. Apple holding up pretty good. I mean, look at this. Now, that can all change, right? But for right now, it's holding up pretty good. Here's Facebook. All right, so Facebook came down, took out the April lows as we were watching. Now, if it loses this level, and we drew this in a few months ago, but if it loses this level, which is a nice balance area, look for Facebook to go down to the 138s, and then the 137s, and then down to 135.79. That's Facebook. How about Netflix? Yeah, Netflix under the 200-day moving average. See what this sets up over the next few days. Alphabet. Alphabet also had disappointing earnings. I believe they say that it's not being used as much. I don't know what the whole thing was. It was disappointing, whatever it was. And if you want more details on this, you could do a simple search for this. You can go to CNBC and read about it. I don't really care as much about the particulars as the reaction. That's what I really care about, okay? Anybody can just sit here and spew, oh, this is why this happened, this is why the news, that's great, but to me, I want to look at what's setting up next. All right, how about Tesla? So Tesla had a big push up as short sellers were announcing they were changing course. This thing is sloppy. I am avoiding this right now. Here's bonds. Bonds to me look like they are in a bear flag. I believe lower prices are to be seen, which would correspond with rates moving higher. Gold is continuing its zigzag pattern here. I still don't see a bottom. Maybe I'm blind to it, but I mean, come on. We're between the 50 and the 200 day. So to me, it's just a ping pong match here for now. All right, and this doesn't look like a full out bottom here on gold. And then oil, which popped up above the seasonal high, the July 4th seasonal high, has now come back down. Watch to see if it holds a 200-day moving average. So let's do the recap. I believe we will see further downside on the short term, perhaps the beginning of the week, but then I want to really look for a reversal there, whether it's a reversal on the 60-minute chart, whether it's a daily chart with one Japanese candlestick pattern, whatever it is. Then I want to look for a bounce. I want to see what that bounce sets up, another coil or pause, and then I want to see if a rally can ensue from there. Right now, I don't think we're ready for that rally, but in my opinion, a bounce is likely sooner rather than later. That bounce needs to be measured. Further downside first, and then we'll see how far we bounce. Questions? I got answers. All you have to do is write me, tiny@attackthemarkets.com. Don't forget to like this video so I move up the ranks in YouTube. Leave a comment, hit the subscribe button, and smash that bell so you never miss a video update. That's it. I will talk to you in the intra-week updates if you're signed up. Again, that's free. Just go to www.attackthemarkets.com or in next week's video. Have a great trading week and a safe Halloween.